This is Carlos Asilis from Glovista Investments, here to discuss our outlook on emerging market equities. First, I'd like to point out that today, emerging market equities represent close to 11% of global equities, as opposed to 1997, where the asset class representation was a mere 0.5%, or 2005, when the representation was only in the mid-single digits. Therefore, today, emerging markets represents a very important asset class that can no longer be ignored either by retail or institutional investors. With that as backdrop, what is our outlook at Glovista? Our outlook towards emerging market equities is bullish. This bullish outlook is anchored on multiple considerations: valuations, top-line revenue growth, earnings momentum, ownership bias, ownership status, and finally, the outlook on the US dollar on a global level. And all of these considerations lead to that bullish outlook. First, on a valuation basis, emerging market stocks trade at a 24% discount on a PE basis versus global equity peers, and a 34% discount valuation versus US peers, close to the historical low going back to 2007. Secondly, on a revenue growth basis, the consensus of Wall Street analysts are expecting top-line growth, revenue growth, for emerging market stocks to be close to 11% in 2021, as opposed to 7% for US stocks, and earnings growth to be close to 31% for emerging market stocks, as opposed to 24% for US stocks. Third, in terms of positioning, emerging market stocks that are severely under-allocated by global investors, and this is quite well validated by multiple databases that we'll be happy to share with you, our Glovista viewers, when you contact us. Next, it's important to point out that emerging market stocks fare particularly well whenever the dollar enters into a bear phase. And the dollar cycle typically tends to last 10 years. When we look back at the last 2 years, 3 years, emerging market currencies have begun to strengthen. Finally, if we look at momentum on a price basis, emerging market stocks put on a bottom versus IFE, International Developed Peers, in January of 2016, moving higher by close to 28%. And versus US small and mid caps, the emerging market equities asset class has put on a bottom 2 years ago in July of 2018. With that, we wish you a very good rest of the week. Thank you.